just go for it.
Okay.
Yeah, it's
cool.
a conversation between two people. That's it.
Were you good, Dan?
Yeah.
With 10 cameras and...
Act natural. It's fine. I've been doing this for a while now. I get used to it. But James McPartland, good to see you today, and welcome to the podcast.
Thanks for having me.
Okay. Obviously, you've got a very interesting sort of background, what you've been doing at Porta Partners when you left St James's Place. So we're going to be covering this, and we're also going to be covering what does the future look like in the profession as well. So we've got a lot to get into today. But before we get into all of that, let's start in terms of yourself and how you got into the profession, and give us a little bit of a potted history.
Well, this is probably not going to come as a surprise, but I pretty much fell into the profession. I still struggle with saying industry and profession, which is still probably a bad thing. But
which one is it? Is it a profession to you or an
do you know
industry?
what? I always, for habit, been in it for 15 years, you just say industry, but I'm really trying to change that. And I have to sort of stop myself each time saying profession. So I think that's probably quite relevant to the times. But yeah, I came out of university, so I studied chemistry at university. I probably knew within a week of studying that at Loughborough that I didn't want to be a chemist. But I thought it would be a good degree to come out with. It looks like you've worked hard.
And did you?
Yeah, I did actually,
Yeah.
to be fair. I did. There was lots of other stuff going on as well, but I was big into sport and obviously socialising. But it was, it was quite hard work. I was with a lot of people that were doing sports science, and they were in for 1 or 2 hours a week. A lot of them were really good mates, but I was in labs from 8 till 5 every day. So it was pretty much like a working job, but not getting paid for it. But came out of there. I'd already done quite a lot of work experience in the city. So I'd looked at insurance firms. I'd been at a stockbroking firm called MF Global, which I did some work experience in the summer. And always knew that I wanted to work in the city because I had a great buzz about it. It seemed like really good fun. Obviously, you could earn some money as well, which was good. So I got a job at MF Global, which is a stockbroking firm, but it wasn't due to start till the following June because it was the first grad scheme that they were doing. So my mum basically said to me, I need to go and get a job. So I interviewed at a couple of different places. And one of them was part of the old network called Kairos.
Yes.
So yeah, quite a number of years ago. And got a job there. I had 3 or 4 interviews. It seemed like quite a fun place. I had absolutely no clue what I was getting into. So when I arrived, I still didn't know what the firm did really. Which we really tried to change from an interview process. But we turned up, we were given basically a phone. That was pretty much it. You didn't get a computer until you got promoted twice.
Oh, really? Just a phone, eh?
Literally just a phone. So got paid for 3 months at 1,500 quid. And then you were basically told you'd learn a script. So pretty much the same size paper that you've got there. Yeah. An objection sheet. And then to find your numbers on LinkedIn and stuff like that and cold call around the city and start a client base. Yeah. Which was quite a baptism of fire because I was absolutely awful on the phone. I think I made a record for not making a single appointment for something like 9 or 10 working days, which was pretty bad.
So the pressure must have been on then.
Yeah, it was. It was.
Somebody breathing down your neck.
I say pressure. It was more my mum that was giving me the pressure. But in some ways, like I didn't have any responsibilities. I was living at home. So I sort of had a bit of a free run at it. And I knew there was a job coming up. And I was like, look, if it doesn't work out, I've got a job coming up in June anyway.
Okay, plan B.
Yeah, exactly. Yeah. So did that. Wasn't very good at it. But I had a bit of a taskmaster as a boss who just made me like constantly get on the phone, make sure I did my calls, constantly learning, which I hated him at the time for doing it. But actually, I really am thankful for him doing it now because
it's a good skill.
Yeah, massively. And to be able to, it's quite empowering to be able to start a business from scratch. Literally nothing apart from a phone, not even a computer. Yeah. And it gives you a bit of confidence if you can do that. So yeah, did that. A 4th month, I got paid something like 240 quid for the month. So I was working like 12, 14-hour days. I got paid 240
Big
quid.
spender. Yeah.
Exactly. That was a great month. But actually, it ramped up pretty quickly. So after the first year, I pretty much had 100 clients that I'd brought in myself that were clients or policy holders, probably at the time, a bit of both. But the actual grounding of the firm was really good. It was quite almost like the beginning of sort of financial planning. It was very much about the plan, and there was a lot of drawings involved, and it was a really good place to learn. So I did that for 2 or 3 years. Really enjoyed it. Like absolutely loved it. MF Global went bust in that time, so it's probably nothing to do with me. So,
fond memories.
Yeah, exactly. So thank God I didn't go to stockbroking. But we were there for about 3 years, but there was some. It wasn't very grown up as a firm, I would say. We didn't. We wanted to go and own our own business, and ultimately we weren't going to own our own business within that. So 24, I joined up with 3 of the guys that were in with me now, who were part of that firm, all around the same age, like 24, 25.
So that's how you all met then?
Correct, yeah.
Right.
And there's been some really good firms that have come out of that firm, that original firm. Some really good firms. So obviously it was a great grounding. But the 4 of us, we looked around, looked at loads of different things. I even looked at employed roles. And I had a really interesting one with a guy at Smith & Williamson, who was the head of wealth management. And he did an interview with me. And even though he was trying to hire me, he was like, do not come and be employed. You're wasted being employed. Was actually, I really valued his opinion because it pushed me to go and run my own business. So that's basically how I got into
Were you
the
always
profession.
a bit entrepreneurial then? Did you feel like you were employable, or did you feel like you wanted to create your own path?
Not really, I would say. My dad's self-employed and he ran a business.
Yeah.
And quite a lot of my family have run businesses. So maybe it was in the system there, but I was just so young. I didn't have a clue what I wanted to do.
Yes.
But I think having that grounding of being able to start a business so quickly in the first firm gives you a hell of a lot of confidence to be able to go and do it again, and which probably held me in good stead of what's happened in the past couple of years as well, because we were pretty confident we could go and do it again.
Yeah.
So yeah, that's pretty much how I got into the profession.
Yeah. So fond memories, eh?
Do you know what? Actually, really fun place to work. Probably similar to like some of the recruitment firms.
It
was
sounds
quite
exactly the same. Yeah.
Yeah.
Just get a phone.
Exactly.
There's your crib sheet. Off you go.
Exactly, and it was full of
Go
young
make
people.
it, yeah.
It was like really fun.
Yeah.
I was working. I moved out, lived in Clapham. Yeah, really good place to work, and I've got some really good friends from there. And they've all stayed in the profession. The people that could hack it and earn enough money to get paid for the first 6, 9, 12 months have all stayed in the profession, and which is quite remarkable, really, from because I think it's quite a hard thing to get into at the minute.
It's a tough gig when you're just giving, cold calling and whatever. Do you think, where we are now in today's society, that could be replicated again in terms of there's the phone, get on it,
No.
get and do it?
We tried that when we left, and we quickly came to the realization that we're probably losing some really good people because of it. So we changed our business model quite quickly when we joined SJP.
Yeah.
There's still guys that have come through in that method and gone on to create big businesses, and one of them's joined our partnership as well, and he's still with us. So it definitely does work, but it works for a limited amount of people.
Yeah, yeah.
And you're really limiting your options on who you can bring on and bring through. So we changed our business model quite radically, probably 2 years into starting a business with SJP.
Yeah. It's a shame though, isn't it? You build up resilience.
Massively,
Because
yeah.
obviously the people that I bring in now, it's like you have no idea what it was like back in the day.
Exactly. Yeah, it's
You're smiling. The things we got away with as well.
Exactly.
It's shit. It was good fun.
It is shit right at the beginning, but actually when you look back, you're like,
It's
I'm
a
so
crack.
glad I had it. And it was really good crack.
It was, yeah. Some of the disasters and all of that. Okay, so you ended up at SJP. So tell me how that worked out then, because obviously, what sort of timeline are we looking at? When did you join them?
So this was 2014. So I was about 25 when we started the business, but it didn't really feel like we were properly, a brand new startup. Because there was quite a lot of support that came with it. And I think that's probably why we went for them. We looked around at loads of different options, and actually SJP seemed like a pretty good proposition for us. We were young.
Yep.
There was an established brand that actually probably hasn't, it looks like it's been around for hundreds of years, but it hadn't. It was 92 or 94. But there was a certain kudos with having like the gold leaf on your business card. And,
Were you attracted to that then? Because it was the prestige, it was the glow of SJP.
And it was a good thing to have behind us being 24, 25. It's a good story to have, FTSE 250 going into FTSE 100. It gave us a bit of sort of clout, really. So it worked really well. And they were super supportive. They wanted us to grow. They seen that we were young. And they were really supportive in doing that, especially in the early years. Changed probably later on down the line, but at the beginning, it was pretty good. Yeah.
So you looked around and you decided that was the best fit for you. Had a good story. It would have resonated with clients as well.
Yeah, we'd been part of a network already. Yeah. So there was some comfort in that from a compliance perspective. Directly authorised seemed like it was an absolute ball ache. And we didn't have a clue what we were doing, so we wanted to try and be safe. Yeah. So it just seemed like a good fit. Like you could just get on with growing your business, looking after your clients, and a lot of the compliance stuff and technical stuff that we weren't very good at, we could sort of almost outsource. You paid for that, but it seemed like a good trade-off to us.
And looking back then, what was the vision then? Were you looking to specialise in a particular area? Were you looking to grow the business, or was it just, we've got together, let's just crack on and see where we go?
Yeah, the whole niche thing we didn't really have, but because we had cold called around the city, we actually did, because it was all city professionals. So it was either lawyers, accountants, management consultants, bankers. That is pretty much it. So we did have a niche, and ours was pretty much between 35 and 55 before retirement. So we called them Henrys, so high earners, not rich yet.
Yeah.
So we didn't really think about it at the beginning, but that's just generally what happened. Yeah. And a lot of other advisor firms in SJP, the advisors were a bit older, so their clients tended to be a bit older, so like 65, 70, because our client base average age was like 35 to 40. So that was a little bit different. Yeah. So we probably did have a niche, but we didn't know it at the time. But yeah, pretty much just crack on and some income because we'd moved out and we'd left another business. We needed to start again. And I think what was attractive to it as well is that you could work for 15 years and potentially have a exit because it was in what we thought was like in the contract. So build a business, grow it there for 10 or 15 years. And we were looking at the numbers and we were saying, look, potentially we can retire here at 40. So that was attractive as well. I'm not going to lie. So yeah, probably they're the main things.
Yeah. Okay. And within the partnership, your partnership with your colleagues, your co-owners, what kind of roles were you sort of falling into? Were you all pretty much revenue generating, or did somebody do the ops and somebody did, or was it like, we're all going to go out there, we've all got our own clients, let's go and build and see what we bring in?
Yeah, we were very much like profit centers. So we worked underneath the same banner, but it was my clients. And they were Nick's clients and Rob's clients, and we shared the costs, which was good because we could hire 2 or 3 power planners and split the cost, and they're my good mates. We did it nicely. I think that might have, looking back, that might have held us back a little bit because I think in order to grow a big business, we did well, but it would have been better if we would have sort of shared the tasks and maybe have defined roles a little bit more. But we were the rainmakers. We were doing some admin, like you do everything at the beginning.
You do.
So if we could have looked a little bit further ahead, we probably would have hired. But because we were all cost centers, we were always worried about the costs going into our individual pots. We've changed that. So everything's shared. And actually what we feel like we're now is growing a business rather than just a client base each. Yeah. Which is a big difference. But then you can see much bigger.
It's a balance though, isn't it, to get that right?
Yeah.
Because you've got to be fair and you've got to be working together for a greater good.
Correct. And I think that helps if we've just recently, this is probably jumping a step, but we just brought in a COO who runs the business. We still do a lot of the stuff, but we've got more defined roles on what we should be focusing on. And I think that really helps because it's sort of like a mediator between the 4 of us. So I think having him is a good help to manage.
A steady
that.
hand.
Yeah,
That's what you
100%.
need.
We do.
Yeah,
need
keep
that.
you on track.
Yeah, exactly.
Okay. So you're at SJP. You're out there. You're building with your partners. And again, moving slightly forward, things went well. You built a successful business.
Yep.
You've been quoting some of the numbers on different podcasts. So from the outset, or from the outside looking in, it was a successful business. But then things started to change. So can you talk about what sort of started to feel maybe a little bit misaligned?
So we didn't really, we didn't want to buy a lot of clients, and we didn't want to take on a lot of debt, which worked out well in the end. But there is some advantages to going to buy businesses, because you can grow obviously pretty quick. But that wasn't something that we wanted to do, and which helped us out in the long run, I think. But we grew basically organically from nothing to 400 million in 9 to 10 years, and we had people leave in that time and go and set up their own businesses and take their clients. So we had chunks leave along the way. We were pretty happy with that. I'd say what changed was that we were young, and we wanted to see change quickly. And being part of SJP was really good at the beginning, because it provided all the processes, but trying to change it is near on impossible. It's like moving an oil tanker. And we become frustrated in that. So there was certain like niggles that accumulated over the years, that it wasn't just one single thing, but it was a number of things that we just got fed up with. And I think it was more an accumulation of things rather than anything else, and the lack of pace of change. So the main ones, 3 or 4 years, were we wanted some low cost model portfolio services or evidence-based investment approach. Yeah. Because our clients are city professionals, they see the values of index investing, and it was always, it's coming. And it just didn't come soon enough. They have introduced it now, which is great, but it was too little too late for us. Second thing was the charges. Mm-hmm. So the charges were, I wouldn't say the most expensive we've ever seen at all. And I think SJP gets a bad rap for being the most expensive.
It's in the press, isn't it, a lot?
Yeah. Exactly, because they're massive.
Yeah.
And I think it's actually a little bit unfair, some of it, but we wanted to try and reduce the cost and introduce like tiered charging structures for bigger clients. Basic. No, we didn't want them to, we know they need to be profitable, and they're a publicly listed company, so they need to look after the shareholders. But over the years, it felt like it became more about the shareholders than the client and the advisor, which is basically at the heart of the relationship.
Who are the main shareholders within SJP?
Do you know what? I have no idea. But obviously they're publicly listed.
Yeah.
So they need to look after those. But
it was driven by almost shareholder value, as in rather than looking from an advice perspective, your client perspective.
Correct.
Right.
Yeah, because we were a decent sized practice. We're not the biggest practice in SJP by a country mile, but we're a decent sized practice. And because we were young, we got access to people higher up in the firm. And a lot of the stuff was like open forum, and a lot of the people that in our position were asking for the same things. Like, when are we going to get lower cost model portfolios services, or when are we going to introduce tiered charging structure? And basically by the end of the meeting, or the last couple of hours of the meeting, it would be, we get to the crux of it, that they were worried about the share price.
There you go.
And then when we came out of it, the four of us are like, what the fuck? Like, we want to change that, but we can't change it. And that was one thing. And then we go into another big meeting and we'd hear something else, and we'd be like, fuck's sake, this isn't going to change very quickly. So at that point, we started to look seriously.
Just looking back at that particular point, did they recognise that there was a need for change, but they were also frustrated?
Yes.
Okay, so there were.
Yeah, they definitely knew. We spoke to the top guy, the investment guy. He's a really good guy. And I think he was like, he really knew that it needed to change, and he wanted to change it immediately. But it was the people above him that were saying no because they were worried about the share price. So even that was frustrating. They brought in great people who could make the changes, but they weren't allowing them because of the share price. And that just didn't feel right to us. So naively, we said that, look, unless these things change, we're going to leave. That is a terrible idea. There's a bit of a.
You gave them the heads up.
Yeah. If I was to say, I know, if I was to give everybody out there one piece of advice, is don't do what we did. Because
but why did you do that? Were you trying to be honest?
Yeah,
or were you trying to say, look, if you stamp your feet, if you don't do this, we're off anyway.
Exactly.
Yeah.
We were like, look, we're serious about this. Like, we are going to look, and we quoted the places where we've looked and the propositions that could be available, because I'd gone out and already spoke to them. So I went and spoke to like the top people at like Timeline, for example, and I went and spoke to everyone. And in the meeting, we just said, look, unless these change, because this is what is available to our clients, this is what we've got here. There's a massive disparity. We're not asking you to go down to there, but we want some sort of happy medium.
Yeah.
And it was like, oh, either we can't change it or we can't change it yet. And for us, they have changed some of the things now, which is good. But for us, it was too little, too late. And we'd already made the decision that we just needed to get the hell out of there.
So what was your process then? So you were having these ongoing conversations with them, obviously getting some kind of dialogue, but they were kicking back for whatever reason.
Yeah.
It's on them. What was your process? Did you go out and you spoke to other advisory firms, other platforms? Did you do a thorough piece of research to really make sure that you were making the right decision? Yeah.
We probably 2 or 3 years, and we started looking.
Wow.
We were always looking at what other people were doing. I've got really good friends that run businesses outside of SJP, and I've got really good friends who runs businesses in SJP. So I would go and learn off those guys. They would learn off us. I would go and speak to other people outside of SJP. But then, I basically just would reach out to them on LinkedIn and reach out to the top person and just say, can I speak to you? The thing about our profession is that people are so willing to help other advisors. So I spoke to, when I spoke to Alan Smith, and he introduced me to some really good people, and then that basically snowballed. So I'd just then get introduced to someone, and then I'd go, look, you should really speak to this person. I'd go and have a meeting with them, and you should go and speak to them. And I got all of these things, and basically what we boiled it down to is a list of things that we needed to organise and sort out, and then we basically divided it between the 4 of us and said, go and research what the best platform is. Go and research what the best model portfolio services is. So that's what we did. And we just went out and did that and designed the whole process. But that was probably a 3-year bit of work. Because we were walking away from a decent sized business. We needed to make sure it was the right thing that we were going to. Even just stuff like regulation, like, do you go to another network? Can you go directly authorised? There's a really good person that we spoke to, which is a guy called Rob Stevenson, who's part of Kingmakers. Yeah. He was a good guy to speak to because he's got really good knowledge in the industry or profession. Yeah. Okay.
Keep swapping them, it's absolutely fine.
So, it's just tons of research. Yeah. Things I would say is don't send it from your SJP email address. I made that mistake. Oh, dear. Which didn't have any repercussions, but I wouldn't encourage other people to do that. But it was mainly just going to speak to as many people as you can.
So you divided all the jobs up, and you go and research that, and then you all came back together to actually then discuss.
Present back and say, look, we think, and then we would test it, and we would say, why? Why do you think that's the best? What about this? Well, I've heard about this. Yeah. Just to really, it would have probably changed. Yeah. But we wanted like a robust, what can we do? If we had a blank slate and we were a client, what would we want?
Were you getting any sort of pressure from clients were they looking at maybe the charges or the proposition and thinking they could see that there were other opportunities, other advisors, offering different types of propositions? So was there any pressure coming from clients to say, look, guys, you do need to start, looking at various things?
Yeah. Like the press was bad.
It's shocking.
It was so bad. Yeah. Like it's actually not as bad now, but 3 or 4 years ago, it was constant. So every review that you'd go into, generally your long-term clients would say you'd answer the questions on it. Look, there's Yodel report or whatever, and it was easy to defend, but it was the constant barrage of stuff against SJP, which a lot of it was unjustified, but it was a real pain in the arse, because every single client review, you were on the back foot straight away, rather than doing what your job should be, which is doing the financial planning. You were having to sort of justify where you were, and that was annoying. Where there were some real problems was bringing on new clients. It would always, you'd have your first meeting, would go great, your second meeting, presentation, you go through the Voyant, which is the cash flow modelling stuff, present sort of the one-page financial plan, which is what we do, and then we would say, look, go away, this is the plan, have a think about everything. If you need to go and speak to other people, go and do that. And then they would come back and say, oh, I've just researched SJP, and what about this, what about that? And it was having to answer questions, and the attrition rate from second to third there was a lot of detriment, I would say, to new business. I don't know whether it's as bad now, but it definitely was bad in that time.
Did they ever talk about the conflict with the model with SJP? Because that's one thing that everyone talks about anyway. But when you're in the profession, you look, that's fine. But when you're not and you're a client, did they actually come and say, well, there is a conflict here in terms of how the proposition is, geared towards SJP from a client perspective?
Not really. It's a restricted proposition. So you've got a limited amount of choices. That's what the sort of, I think that's what the conflict you're sort of referring to. But
it was the conflict being it is ultimately SJP. Where you are, my understanding, restricted in terms of, you can't go to market, etc.
Yeah. But that's any restricted proposition. There's loads of them out there. And actually a lot of the IFAs that we looked at were basically restricted anyway, because they use one platform, they use one investment proposition. Yes, they have to do the research before it, but a lot of the IFAs that we spoke to were one platform, one investment proposition. So I would say that their advisors are pretty restricted because they can only do one thing. So no, the proposition wasn't actually that, it wasn't the best because they didn't have the lower costs and they didn't have the index investing or the evidence-based investment approach, but it wasn't bad as well. There was a lot worse propositions out there. And clients got some comfort with being a FTSE 100 company. So I'll come on to probably some of the objections you get when you do leave SJP, which you don't expect. But pressure, yes, because everybody was seeing a lot of stuff in the press. We spoke to our clients about what we were thinking. And like, what would great look like to you? And we would get their feedback. But we did that quite early on. And I'd say that clients then become frustrated that you haven't moved already.
Because you were saying about 2 to 3 year process. So when did you start?
Probably like a year before we left.
Okay.
Like a year to 9 months, just scoping it out and saying, what are your views on it? What are your views on SJP? And then you could sort of gauge the conversation. But actually it was all, as soon as you said what we were trying to do and the reasons why we were trying to do it in the first place, they were more frustrated that it wasn't happening like then and there. They thought it could just be, you just get up and move. But once you explain the mechanics of it, that we're walking away from £400 million worth of assets under advice and all of the income to pay all of our staff, they then understood the risk that you were taking by walking away from that. And I think they appreciated it. So you had to explain the reason why you're going to do it and then what the consequences of us moving from this proposition is. So it was more that they become frustrated with the pace of change that we hadn't moved already. So again, a piece of advice would probably don't mention it and say that you're leaving until you're actually probably pretty sure that you are going to be doing that.
So then you decided at the point that was it. We're off to it. Tell me about that decision. Tell me about the process that you went through. Did you resign? What did you do to actually say?
So we resigned. Again, we did it in a bit of a different process. And again, I would not recommend that you do this.
Resign from the partnership because you're not employed though, are you?
Yeah, it's a joke, right?
Okay.
So
jokes are good. Carry on.
Yeah. So even though it was our business, that we've built.
Yes.
We basically had to resign from our own business. We did it in a different way, okay? And again, I would not recommend that other people do this, okay? But what we did was 3 of us resigned to go and get set up, and we left one of the partners and the staff so we could still pay all their bills and income, make sure their clients get their annual reviews, and because there's a massive pressure from SJP to get the annual reviews done, and that was just an absolute ball ache in itself because of all the tick boxing and stuff. But that aside, we didn't know how long it was actually going to go to get set up and get all the FCA license in, and whether SJP would withhold our references for whatever reason. So we wanted some continuity for the clients, that we could still look after them over the end of the tax year, which is super important. Yeah, because a lot of our clients are city professionals, they top up on the last day or the last minute because they all got bonuses and things like that. So what we did was 3 of us resigned, we went and get set up, and then we basically then started to set up the new business and started to move the clients over. That is not the ideal thing for you to do if you're planning on doing that, because SJP cotton onto that pretty quickly, and they will probably act quite aggressively to that. So yeah, it was a really weird thing. Like, we had to resign from our own business.
That's bizarre.
Yeah, it was almost like we were employed.
Yeah. So it was your business, and these are are these your clients?
Yeah.
Yeah. Okay.
So I know it's just ridiculous. Like, it was our own business, and we got really pissed off for that. And then you knew how little control you had. You didn't have any control in that business. And I think a lot of people saw that, and that scared them. When
you say control, what do you mean that you had?
The fact that we had to resign from our own business,
which is the irony. Yeah.
Yeah, exactly. Yeah. It's like we had to resign from our own business that we've owned and built.
Yeah.
Because SJP basically won't allow it, because it's written in the contracts that there can be no like conflict or whatever. So that in itself, people need to be probably aware of that. I wouldn't do what we did, because it puts the people that are there in a compromised position. And it's really shit for the people that are left behind, because it was a pretty toxic atmosphere, and they didn't want to be there. They wanted to be in the new business.
I was going to say, who got the short straw?
Yeah, exactly. We literally just pulled it. We literally pulled it.
I'm off.
I was like, please, no, please, no. But we had to do it like that way because, well, we thought it was the best way to do it, because there's 18, 20 people. Like, a lot of them are friends, some of them are family, and we needed to make sure that their wages were covered. We built up a bit of a war chest that if something did happen to the business, and when we did properly, everybody walk out the door, that we could pay people's wages for 9, 12 months. We didn't pay ourselves for a year. But yeah, I would say don't do it the way that we did it. There's a better way.
Yeah. What was their reaction when you resigned from your own business?
I think they were quite shocked, because they thought that we were just going to sort of carry on, and it was quite a ballsy move.
Because you are potentially walking away with nothing.
Yeah. My wife was like 8 months, 8.5 months pregnant. It was my 3rd child. I know.
Just to add to the stress.
I know. So, but yeah, my 2 business partners have both got small children, and and it was a really stressful time. I'm not going to lie, it was like tough.
Were there any times where it was like the 2 o'clock in the morning, waking up going,
oh yeah, all the time, like for a year.
Yeah.
Like it was like a year. It was a year.
Yeah. A year from when you resigned from your own
before
business?
Before that, because we were worried. Like we knew that SJP knew something was going on, and they were being quite how do I say this in a polite way, which is, we might have to cut this bit out. They were being quite aggressive with quite a lot of businesses at the time. So we knew that if we put a foot wrong, they could basically terminate us. And they were threatening quite a lot of business with that. So that was the worry. Like, if they terminated us, for example, how are we going to go get another license?
On what grounds would they potentially terminate somebody? I know people can find stuff, but
yeah,
I'm trying to understand what lines you have to walk to be in the good books, and what line is, okay, if you do that, then they are going to come after you.
Well, the problem was, it was like just random stuff. People were getting terminated for, in our opinion, very minor reasons.
Okay.
So we needed to be careful about that. So that was really stressful, and like going through that whole process and getting your license on the other side. What are they going to write in your reference, and paying people's wages, and are we going to be all right? And it was super stressful. But I think because the four of us had done it before twice, we'd started a business with a phone. We'd then basically left that business with nothing, gone and set up another business, and it went pretty well. Yeah. And also the confidence that when you spoke to clients, they were just like, what do I need to do to move over? Or how can I make sure that I support you? Or that was really nice.
Were all your partners as resolute all the time? Or did you all support each other? Did you all have your own doubts and you're like, oh.
Yeah, we definitely did. And that's a massive advantage to being in a team. You can really lean on one person's down. They would call the other person and say, are you all right? Our wives were speaking to each other because it's a lot of stress on them as well. And our partners became pretty close. They had their own WhatsApp group because they were worried. Like, what the fuck are we doing?
God, yeah.
Exactly. So they found comfort in each other and like, is Nick okay? Or is Rob okay? And so being part of a team is a massive benefit to have. And I've never not had that. And we've had people now leave SJP who ran businesses to come and join us because they want to be part of a team.
Cool.
And they want to bounce ideas off other people and feel supported. And I've massively taken that for granted, I think, because I've always had it. But from what I understand is that if you're on your own, it's a pretty lonely place. And I think going through that by yourself would have been hard, like really hard. But I think there's a better way. So part of this and what we're trying to do now is to show people there is an easier path to what we went through, and to do it, if you're going to do it in the right way.
Yeah. Should we break up some of those steps then? So because I think this is quite interesting. I will ask before we do that, your wives, are they still in this WhatsApp group?
Yeah.
Oh dear.
Yeah, I know. Terrible idea.
You want to get back on that?
They went to a spa recently to just mull over the past. Like they've been meaning to do it for a while because it was all over WhatsApp. But they went to a spa recently to like, they wanted to meet up to say, oh, what a fucking shit time that was. But probably should try and delete that group.
James is a bit late tonight. Yeah, you're going to get there.
Is Nick still out? No, he went home ages ago. Fuck.
They're having a meeting, are they? Yeah. You want to get hold of that.
You got Guinness down your shirt.
Yeah. Terrible. Clients. Okay, so they're still in a group, but you had lots of concerns. Okay, but now if you look at it with what you've learned, what would you if you were doing like a 3-step or a 4-step guide, what would you tell people to avoid doing?
Yep. So avoid doing. Don't say anything to whoever your principal is. This probably would be my first piece of advice.
Yeah.
I would then say don'ts. I would say do's is go and speak to other people that have done it.
So get advice.
Yeah.
So give you a nudge as well.
Yeah, give me a nudge.
Yeah.
But anybody, I spoke to other people that had left SJP, but there's not that many that have done the similar way that we'd done it. A lot of people had sold their business and then gone and set up an IFA. They didn't really just walk away. So I would just go and speak to as many people as you can. And the profession, people are really willing to help. So just reach out to them on LinkedIn. Yeah. Advisors always want to talk about themselves for an hour. Hence, I'm on this podcast.
Doing a great job. So get advice, and the profession is there to help anyway. So there are good people out there. I think anything to do with SJP, people are quite happy to help anyway.
Yeah, 100%. I would say get a decent law firm to look over whatever contract you've signed.
Yeah.
So then you can really design a process that is compliant to get out in a compliant and quick manner. We've got that.
But is your situation common within the group? because there are other people who have. My understanding is they've purchased businesses as well.
Yeah.
So I'm trying to understand whether what you did, can it be done by the majority or everybody else, or it can be. Yeah. Okay.
Yeah. People worry about their debt. It doesn't help, but there are options out there if you do have debt. So I would say go and speak to people that have done it before. It's not a major issue. SJP sort of sometimes can feel like you're tied in with debt because you built big businesses, and people do really well out of it, and they've got succession for people's clients, and there are some really good things to it. But if you don't feel that the organisation that you're in, I'm not just saying SJP, but any organisation, is go and speak to the people that have done it. But debt isn't a major issue. You can still move around if you want to with debt. Okay, so that's probably one. Is it common for people to do? No. Do I think it'll be more common in the future? Yes.
Why do you think that?
Well, with SJP, for example, the charges, how the early withdrawal charges worked, clients were sort of tied in with an early withdrawal charge on their plan. So if you invested, I don't know, 100 grand or whatever, they would get 100% allocation, but it would tier down from 6% down to 1% over, or to 0% over a 6-year period. So if they'd been successful businesses, quite a lot of their clients may have a lot of penalties to get out. But they've changed their charging structure so that those will start to fall off. So it will become less of a barrier, I would say. I think people don't know what's in their contract, like who owns the client relationship. So I would get someone who has seen quite a lot of them to look over it, or get a law firm to look over it, and just know where you are. Apart from that, I think then you've just got to make your own mind up. What I would say is that because people have trodden the path, you can get back to a very, very similar position to where you were financially, because that's the worry. You walk away from all your income. You can get back to a position that you're in very quickly if you're organised and you do it in the right way. So my advice would be to go and speak to other people that have done it, and they can probably give you a bit of a heads up on what to do.
And what was your timeline? Was it about a year before things started to?
Yeah, we were like we were looking back. We could have probably done this quicker, but we looked after 400 million, and we'll be at 300 million. That was we started in March, April. So we were at 400 million when we left SJP. Obviously, we start with zero, but we'll be at 300 million by the end of the month.
Wow.
So
power of relationships, eh?
Yeah, it's busy. So you've got to go out and see all of your clients.
Yeah.
But if you're organised and you do it for the right reasons, then all you've got to do is go and see your clients and making sure that you've got a really smooth process at the back end.
Yeah. So if I was a client with you under the SJP banner, and now you've obviously moved on, I said, James, I'm coming with you. All right, I'm with you. With my investments, etc., which were with SJP, do they remain there, or that?
Yeah.
No, so they're still there.
Yeah.
Okay.
So still there, still invested. Still, my money was invested with SJP for 12 years, so it's not bad actually at all. And I would say that, look, I've obviously now moved my investments and my wife's and my children's and my family's investments over, but yeah, they remain there. You leave.
Yeah.
And then you need to sit down with a client and say, these are your SJP plans. This is what they're charged at. And this is what the new proposition is. We didn't charge any client to move over. I think that's pretty obvious, but we didn't charge any client to move over because it's our decision to leave, not theirs.
Yeah.
But we basically said, look, this is the new proposition. This is the old proposition. What do you want to do? But charges were quite a decent factor because we were reducing the cost by 60 to 80 basis points.
Okay.
Which is quite a lot, especially on bigger clients. The investment proposition and that we looked at, the evidence-based investment proposition that we chose, it's got a really good story behind it, and they're also it's a big player. So I think just having a solid investment proposition is really important because clients care about that. A lot of advisors or planners think about they just care about the plan, but clients do actually care about the investments. And we probably don't even touch on that really when we go through the client meeting.
Yeah.
But when you're moving, it's obviously an important factor. And the story, like explaining the story of what you've given up and the reasons why you're doing it, which ours was charges, technology. Like the technology just didn't keep up with the pace of change that we wanted. And the clients could see that because things would take quite a long time and they became frustrated with it, especially in this day and age. People want things instantly. And the investment proposition.
Yeah.
And once you've explained that it's a hell of a lot more cost effective, the investment proposition is better, in our opinion, and the technology is a hell of a lot better. They're like, what's the catch? And quite often, some of the clients we'd already explained it to said, when we first did that meeting, they go, okay, so where's my portfolio now? And I said, well, that's before we've actually even had the meeting to discuss it. They just thought we were as soon as we left SJP, it'd just get moved.
Really?
They didn't have to sign anything. Right. So I think I wouldn't worry too much about people staying where they are because they value the relationship that you have with the client, whether it's with SJP or whoever it is, they value that relationship. And if you move, I would say there's a very high likelihood that they will move with you.
Yeah. So it really wasn't the strength of the SJP brand for the client. It was the strength of the relationship with you.
Yeah.
And your business partners.
I think some people do benefit from the brand because it's big and people want their money to be safe. But I think for our clients, the brand was not a benefit. The amount of conversations that we had when we left and they said, oh, I can refer you now.
Oh, yeah, of course you can't, can you? Yeah.
Well, it was more that they didn't want to refer their mates to an SJP advisor because they've seen stuff in the press.
Yeah.
And we were like, what? Like, we didn't know that was going on. Or they said, oh yeah, it was like some of my really good clients that said, look, I've had conversations with other people because I was worried about the whole press thing. And he goes, thank God, because I just don't have to move. We didn't know that until we were having a conversation. Do you know, it's those conversations that are going on.
Do you think it deepened the relationship with clients?
Yeah, 100%. Yeah. Like your clients when you leave are your biggest advocates by a country mile because they can see what you walked away from. They know I've got a wife and 3 kids and they know the reasons why I've done it and the benefit it has for them to move.
Yeah.
So the amount of referrals that we've had since we've left, because those clients really buy into the reasons why you're doing it, has been amazing, actually. Like really, really cool. And how can we help? How can we help you?
Yeah.
Which has been pretty cool thing to say.
Makes me think about the market in general with all the consolidation going on and firms buying each other, and when actually I would question what are they actually buying them, because ultimately the advice and the relationship is with the advisor and the client. It's an interesting conundrum.
Yeah. It is. People do value the relationship. They just value service and they just want to be looked after. And there's a continuity, I'd say, by just having the same person do it. We're very much about a team doing it in our business. So it's not just me that looks after Mr. Client or Mrs. Client. It's our team that looks after them. So they value the team, not just myself.
Yeah.
So yeah, I do think it's pretty important. It's a good point, like what they're actually buying.
Yeah. It happens all the time though, isn't it? You know, a company's bought, 2-3 years later, not happy, whoever's been bought has gone out, and the clients go across anyway.
Yeah.
But it's
the roundabout.
It's the game that we play. I've said it so many times. I always find it quite amusing when people say, "Oh, the reason we've chosen this is because we're mutually aligned in values," and then 2 years later you're not. It's always surprising. Do you know what I mean?
Yeah.
Like 2 years later, so you're not aligned anymore.
Yeah.
Because you've had your own output.
Yeah.
That's just my assumption. Who knows?
That is true.
Who
That
knows?
is true.
Obviously it was about so the person who got the short straw was left there. He stayed. I feel sorry for that guy.
Yeah.
And then for about a year, you obviously then were rebasing. So what happened then? Did you go directly authorized? Did you go to a network? What was the UCO?
So we looked at everything. Like we wanted to look at every single proposition that we could, because you're always going to get value. Even if there's things that you don't think that you're going to go for, there's always a bit of value in going to speak to them, because you can learn something.
Yeah.
It might be like, oh, they've got a pretty cool piece of technology there, or because often they would demo, and I've never seen a bad demo. So, you'd come out of every single thing, you'd be like, oh, that's quite a cool thing. That's quite a cool thing.
Shiny.
And you would you'd amalgamate the lot and say, how can we find the best tool that's going to do that really cool thing? Or so we literally spoke to everyone. And with the help of Rob Stevenson, we ultimately wanted to try and go directly authorized. But the problem is that consultants that we had said that it could take a long period of time. And some of the advice we were getting was like, it might not even happen. So you could put in get it all done, and then you don't actually get a license. Well, you're out of the game then for 18 months, 2 years, let's say. It's just, it's a tough thing to do. And so what we looked at other independent networks, and we looked at other networks. And becoming an AR just seemed like a quicker thing to do, which is important for us, because we wanted to get back up and running quickly. I think the ideal thing, if you can do it, is find a mate, like a really good mate who's got a directly authorized firm, and become an appointed representative of those guys, because it gives you a bit more freedom to do the things. You obviously need to make sure you're aligned with the principle, but they can allow you a little bit more freedom to do. The important stuff for us was like using the right CRM system from the beginning, and using the right technology from the outset, because we had a really unique opportunity that we got to start again.
This is it. It's brand new.
Yeah, it is.
Yeah,
and everybody was like, you can't underestimate that, because if we could go back and just put everybody on one system, it would make the business so much more efficient. So that was really important to us, is to have the right data in the right CRM from the start.
Yeah.
So that's basically what we did. We went and did that. What actually happened was that we got introduced through the CRM provider called Planner. You should go and speak to these guys, because they sound like they've got some they're trying to do the same thing. So we then got introduced to Soderbergh, and it was more like a fact-finding thing, just to go and see what they do and see if we can go and learn something. Yeah. But actually, when we sort of spoke to those guys, it seemed a bit different to the other things that we'd seen. And what we did like is that they were using all the same systems that we wanted to use. Okay. So the fact that they were building all of their stuff off Planner. Yeah. They had Seckle as a platform, so new technology, which is what we wanted to try and do, but it was quite a big investment to build your own platform. They were already doing it. So a lot of the stuff that we wanted to do, they were already sort of doing it. So I know we've just laughed about cultural alignment, but it actually, we took the piss. It actually felt like that. Yeah. And even just like the technology and stuff that they've got is pretty slick. Yeah. So what they basically came to us and said is that, well, look, we're trying to, we really like you guys. We really like what you're trying to do. We see you as a massive growth prospect, and they put an investment into us, which is a pretty cool thing to have.
Unexpected?
Yeah. Like we weren't expecting, that wasn't even on the radar. Yeah. But what is cool about that is that they become an owner in your business. And the mindset, how it changed, was where we'd come from, all of the costs and everything was put back onto you. So your principal, which in our case was SJP, but it would be the same for others, what they care about is the top line, the gross. So how much are you putting in, okay? And they don't really care how profitable your business is, because all they care about is the top number. So all we got told was throughout the thing was, oh, if you want to grow, hire someone or hire another admin staff or hire another, and all the cost was put back onto us because it then increased the amount that we did and they would become more profitable. Where the mindset shifted, because Solarweb bought into or invested in our business, now when we go, oh, we're thinking about doing this or we're thinking about hiring a COO, and they're like, whoa, how about we try and improve the technology to make
Increase
you a bit...
productivity. Yeah, absolutely more efficient.
Exactly.
Yeah.
Why are you hiring someone, or could we do it with technology or make you more efficient? And just a completely different mindset. And we've got some pretty exciting growth and prospects. And it's very much like, how can we help you grow? And it feels like they've got your back, which is a really cool thing to have.
Because they're a Nordic business, is
that
right? Yeah. Can you share what their sort of, and I don't mean this in a negative way, but what their play is? Are they, because they've obviously bought a few organisations. They bought Artorius recently as well, so they seem to be having quite interesting growth plans. But can you share in terms of what they're trying to do in the UK as much as you can do?
I'll probably get myself into trouble here, but we so they're
it wouldn't be the first.
That is true. I've got to get myself
add
in
it to the
loads of
letters.
So they're a Swedish wealth management firm. They're the biggest in the Nordics. I've never heard of them before. But
we'll edit that bit out.
Yeah, exactly. I hadn't.
Yeah.
But they're biggest in Nordics. Big in Holland. They made quite a big. I think they might be the biggest in Spain. Okay. But they see growth in the UK because they've gone around, analysed the market, and they look at a lot of IFAs, and the profit margins on them are super low because they've got a lot of sort of legacy systems and they're not built on the right technology, and just super inefficient. So the profit margins and the admin staff that they have is normally sort of 4 to 1. Support staff to an advisor.
Yeah.
In Sweden, they have 2 advisors to 1 support staff. So the other way around.
Yeah.
Because the technology should take care of a lot of those things. So we've retrained a lot of our staff to now be client facing. So we've put them through their exams, and they are advising staff rather than we've accelerated that. Yeah. So we've always brought on graduates. They come in and we're trying to get them in front of clients as quickly as possible. They're obviously not qualified. So they sit in the client meetings with us, and we would put them through their exams over a 2-year period. We've accelerated that now. So we wanted to get them through their exams as quickly as possible and qualified as quickly as possible, because we want them out being able to
generate
see
revenue.
clients.
Yeah,
generate revenue, but also...
Nothing wrong with that.
Exactly, but it's... I think a lot of people, there's a big misconception about, well, maybe a lot of firms work like this, is that you come in, you're an admin for a couple of years, you do power planning.
And then...
We don't want that. Like, we don't think that in the future is going to be as big a need for that, because a lot of the technology already...
Take it away.
Well, a lot of ours already does.
Yeah.
So we want clients to come in and be planners.
Yeah.
So we get them in client meetings literally from day one. So they come in, they sit in the client meeting with me. They're doing a lot of the stuff in the background. They did a follow-up email. They're getting client experience straight away. And we get them qualified in like 6 months. And each client has 3 advisors to each person. They're all on we have a client portal, which has got like a conversation. It's like WhatsApp on our client portal.
Cool.
So there's all 3 of us who are qualified advisors on there. So if a client reaches out, he's got 3 people that can go back to him really quickly. It's just a much better user experience. And also, our associate advisors love it because they've come out of university and they're in client meetings a day later. And I think that's how it should be, because I think our profession isn't as shouted about as it should be, because there's a lot of misconceptions about what a financial advisor does.
Yeah.
So I think if we can shout about our process a little bit more and what we do with clients or people coming through and advisors, I think we'd get a bigger uptick in planners coming in, and probably a lot more women into the profession.
Yeah.
Because we are trying to bring women into our business, but that 9 out of 10 people that apply for the jobs are all men.
Do you know why that is?
I think because they see financial planner on it, and they think financial advisor, they think you're there stock picking on a trade floor.
Oh, right, okay.
Do you know what it is? I didn't have a clue what it was, because we didn't really shout about what our profession actually does. And half the clients who come into us don't really know what we do until we sit down with them. And then they're like, oh shit, I didn't really realise it was going to be like this. Yeah. In a good way.
Yeah, absolutely.
Not a bad way, hopefully.
No, it is a good way, because most of your clients have come back with you anyway.
Yeah,
so
exactly.
Proof of pudding.
Exactly. But I think if we had more graduates and actually know what we do with clients, and they could see a route that they could come out of university and they could be planning for families' finances for the next 30 or 40 years and grow their client base and clients with them, I think we'd have a lot more people come in.
It's the best kept secret.
100%.
It really is. If people knew the difference you could make in the people that you advise, you'd get a lot more people through the door. Because it is a profession and you are helping people, and the technical side will be taken away. It's happening.
Yeah.
What I find quite interesting is where you're taking your business is you're getting in the young people in to get them out as soon as possible. You know, back in the day, that wouldn't have happened. You'd have to earn your stripes.
Yeah.
3 or 4 years, hard slog, and then you might get a sniff of a client meeting. So that's really unique. So you're going to be inundated with young people now.
Well, hopefully, because we're hiring all the time, because we've got really good. We want to grow. We want to grow because we want to make a big impact. What does the future
look like for you guys then? Because I know you want to grow. What does growth look like?
We want a 10 times growth in 3 years.
10 times. Okay. So where are you now?
So we're at 300 million. So we want to try and get 3 billion in 3 years.
Wow.
That will come from some acquisition, organic growth. But obviously it's pretty lofty. But we've got a pretty strong plan to get there.
This is the thumbnail for this podcast. Then we can come back in 3 years.
Yeah, they'll be like, Jesus Christ, he didn't do that.
Markets.
But we see there's a massive opportunity, like huge, for people who want to come into the profession.
Yeah.
So it's massive. Want to be client facing straight away.
Yeah.
Want to be trained up really quickly, but also for retiring partners. Like a lot of the advisors or planners that we meet tend to be older. Their clients, they're looking at an exit strategy in the next 3 to 5 years, but don't want to sell to certain businesses or don't just want to sell their client, but they want succession. And the fact that we can offer that for them and actually have like a really client-centric proposition that they can go to, we see there's a huge opportunity for that. But also for business owners that want to realise the value that they should get, because it's a really valuable business that they built up. But they often don't want to just either sell their businesses or sell their client book. They want an actual really good outcome for their clients. Yeah. But they also want to see young blood coming through so they can take care of the kids that they're going to inherit the money. And so
intergenerational wealth.
Exactly.
Yeah.
We see there's a huge opportunity there.
I can see you're really enthused by this as well. And I can see the entrepreneurial spirit. So you've got big growth plans. I can see you're very positive as well. What sort of challenges do you think you're going to expect? Because obviously there are growing pains in a business. So if you sort of project forward, what sort of things are on the horizon that you're keeping an eye
on? From a pure business perspective, and what our growth plans is obviously you're always concerned at market highs because I'm an investor as well. So obviously that could affect it. But challenges in the profession, I always try and reframe this, but there's a lot of chat around, like you've seen the share prices in a lot of wealth management firms went down by 9 or 10% because of AI.
So tax planning,
But tax planning, but that's really weird because that's not what we do. It's obviously a little part of it, but I wouldn't say that's the fundamental part of what we do as for clients. But yes, there's going to be challenges with AI. But if you are at the forefront of that, it also could be a massive accelerator, because if you embrace it And we could service so many more client households if you're actually efficient with how you do business. You could see more clients. And instead of being able to look after 100, 150, we call them households or families, you might be able to do 200 or 250. And if you expand it out with the amount of advisors that we have, it could be a huge opportunity. So I think when people embrace it, it actually should be a business accelerator rather than a detractor. Other challenges in the profession. You've always got to look at regulation. So something could happen regulation-wise that could affect our business, but it's not something that we see on the horizon, and I sort of feel like they're going to probably relax.
And you can't control that anyway.
No, you can't. I'm pretty positive at the moment.
You are.
I'd say the biggest mindset shift that we've had from where we are is the culture from where we came from. The proposition and everything in SJP is pretty good now. Like, I'm not going to lie, it is good. They've got low cost stuff. They're a big organisation. They've got a lot of resources. Technology's still not great, I would say, but it is a good proposition.
Yeah.
The culture is so different outside of SJP. You are so more growth orientated and growth minded that you don't really worry about the negatives as much. We always felt that we were a little bit constrained, and that wasn't a cool place to be. Not everybody will feel like that. That's how we felt. Yeah. And when we left, it felt like sort of our horizons had sort of opened.
Freedom.
You're like, it's freedom. You're like, shit, we can actually go and be creative again. We can go and do this stuff. And even this, like just being on the podcast, we would have probably had to get it signed off.
SJP
like every
do.
100%.
Absolutely.
And they probably said no.
Yes, they do.
Exactly.
So I can't do it. Yeah.
Exactly. So
I've tried.
Just even that stuff, like it felt, that to me felt constrained. And it's not a nice feeling when naturally you are a positive person and you are quite entrepreneurial, and we want to go and do different things, and to have that constraint of it just didn't feel right to us. I don't know if I even asked your question there.
No. I think, again, this is part of looking towards the future. There are some challenges, but is there a conversation that advisors are not having that they should be at the moment? When you look at where the market is going in the future, what are they not talking about and they should be talking about, and it should be front and centre?
I think we've touched on it, but we should be shouting about the profession more.